This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. You are listening and watching Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, and we've got stocks. They are trading higher. We've got a couple of IPOs, and don't even talk to me about those meme stocks. We got a new bunch that are actually kind of soaring in today's session.
Krispy Kreme? DNUT?
Yeah.
Anybody?
Beyond Meat.
Beyond Meat.
What's the other one?
I don't know.
There's another one.
Those are sort of blasts from the past, and that's certainly showing some optimism.
GoPro.
GoPro. Thank you. Yeah, another blast from the past.
Exactly.
Are they excited about the optimism over trade deals? Is that what it is, Carol?
I don't know, but we're going to certainly talk about trade deals. Keep in mind, this is all ahead of some really, really big tech earnings. So we're going to talk about, first of all, in the next 60 minutes, that big trade deal with Japan. Next one, maybe the EU, and then next stop, I guess you could say, is China, Tim.
That's certainly the hope. Also, as Carol mentioned, big tech earnings after the close. Alphabet and Tesla are reporting. Also, Texas Instruments getting hit pretty hard in today's trade after their report yesterday. Speaking of tech, Carol, big AI event happening in Washington, D.C. today.
Yeah, we're going to check in with our Ed Ludlow, who has been there all day. And then bigger IPO momentum. Got a little bit of a theme here, folks. Two more companies going public, and we've got the CEO of one joining us. Got to say, stock's trading a little bit lower here in its first day of trading. All right, more to come in the next hour. First up, though, let's get to that rally underway. A little bit of a rally on Wall Street. Let's check in with Charlie Pellet.
All right, thank you very much. Lots going on. We got you covered on Bloomberg Television and Radio. Indeed, S&P 500 index record right now, 6347, up 37 for the S&P 500 index. That is a gain right now of just about 0.6%. The Dow pushing higher, up 1%, higher by 436 points. Nasdaq up 81 for the Nasdaq Composite Index, a gain there just about 0.4%. Carol and Tim summed it all up. Optimism about trade and tariffs. We've got the 10-year 4.37%, the 2-year 3.87%. Spot gold now down $38 the ounce, down 1.1%. A retreat as well for crude, down 0.2%, just above $65 a barrel. And Bitcoin now down by 1.4% at $118,149. Carol mentioned Texas Instruments. Stock is plunging now. TXN on the ticker. And right now it is trading lower by just about 11%. GoPro and Krispy Kreme surging amid an expansion of the meme stock rally. GoPro now up by 16.8%. Krispy Kreme, DNUT, donut on the ticker. It is up by 7%. Beyond Meat was in the category earlier in the session, but right now Beyond Meat is lower by just about 0.4%. So again, recapping, busy day for Mag 7 earnings. Tesla, Google after the bell. We got you covered on that. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, then cross Beyond Meat off of the meme
At least
stock.
for now.
It was
it was
higher.
up as much as 14%
Yeah.
earlier in the session.
I know.
Okay.
Talk about some volatility.
That's what makes it a meme stock.
It's exactly. I mean, no fundamental changes, but just some play and a lot of momentum out there in the world of social. Hey, let's get to what really is probably top of mind in addition to those big tech earnings, but what's going on when it comes to trade and tariff deals. Trump administration, no doubt about it, out in full force today, including showing up earlier on Bloomberg Television and Radio with the surveillance gang on TV. Top of mind, those latest trade agreements still waiting to be done, including one with the EU, and then another that's already been hammered out with Japan, Tim.
Weighing in, both U.S. Treasury Secretary Scott Bessent, followed by U.S. Commerce Secretary Howard Lutnick.
15% for Japan for reciprocal tariffs for autos. That is a different kind of deal, but because the Japanese proposed a very innovative solution.
Has Brussels come up with anything innovative?
Not yet. The EU has a collective action problem. 27 countries.
That's up to them to negotiate, right? Are they willing to open their market? I don't think anybody. Europe's not going to go and give us $1 trillion to.
Well, can they get below 15%, or is 15% now the floor?
For autos, I would.
No, for a reciprocal tariff for the European Union.
I don't think
at one point they were willing to
countries-
accept.
I don't think
10%.
big countries can get low like that.
All right, that, of course, is U.S. Commerce Secretary Howard Lutnick, preceded there by U.S. Treasury Secretary Scott Bessent. They were earlier on Bloomberg Surveillance on TV and radio. Hey, check out those full interviews. You can find them on the Bloomberg and at Bloomberg.com. Hey, for the tell, though, on these trade agreements and what impact it may have on global trade and for investments in the U.S., we start in the nation's capital with the senior advisor in Japan chair at CSIS. It's the Center for Strategic and International Studies. Kristi Govella joining Tim and myself from the nation's capital. Kristi, it does seem like things are moving along on trade deals. According to what's kind of coming out, are these good trade deals for the United States? Are they good for the economy? Are they good for the global economy? And why or why not?
Well, it certainly seems that the Trump administration is gaining momentum in its quest to negotiate trade deals before the August 1 deadline. If we look at the deal that was announced with Japan yesterday, it's clear that these are good deals for the U.S. in the sense that the U.S. is raising tariffs by significant amounts and therefore accomplishing the goal of the Trump administration, also by getting increased investment that addresses the trade deficit. Some could argue that the concessions being offered are perhaps not as significant as they might have wanted, but they are getting, for example, Japan $550 billion in investments, as well as concessions on rice imports and also on auto safety standards. So these are meaningful deals in a sense. And the deal with Japan was the most substantial negotiated yet in terms of trade volume.
In your view, does it seem like the deal with Japan is better for Japan or better for the United States?
It represents a compromise on both sides. Japan's initial position was that it wanted the removal of all U.S. tariffs, which, of course, it did not receive. But a key issue for Japan was the tariffs on automobiles, which were at 25% from earlier in the year. So Japan received a reduction to 15% on autos and also received an overall reduction from the proposed 25% reciprocal tariffs to 15%. So that is a substantial improvement over the initial conditions Japan was facing. It's also the lowest reciprocal tariff rate that's been negotiated to date with a country that's running a trade surplus with the U.S. But make no mistake, 15% tariffs are still a significant blow for the Japanese economy. So, things were given and things were gained on both sides.
Hey, there was a Bloomberg story, Kristi, out this morning. It included a quote from Trin Nguyen, senior economist for emerging Asia at Natixis. And she said, we live in a new normal where 10% is the new zero. And so 15% and 20% doesn't seem so bad if everyone else got it. And she's talking, of course, about tariff levels. She went on to say that a 15 to 20% tariff level, it's still profitable for U.S. companies to import from abroad rather than produce similar goods at home. So wait a minute. I thought these trade deals were about bringing back manufacturing and supply chains to the U.S. and investment back to the U.S. Is that going to really happen?
Well, on your initial point, it is true that the Trump administration has managed to reset people's perspectives on what constitutes reasonable tariffs. So, what we see with Japan, for example, would have been considered horrific, and the minimum 10% that seems to be on the table is also shocking by previous standards. But it is true that in the longer term, it's still up in the air whether these tariffs will really achieve the goal of bringing investment and jobs back to the U.S. in a substantial way. These tariffs are not necessarily the best tools to do that. And it also is very difficult to predict how companies and others will react to them. So we can only really see the short-term consequences in terms of rising prices for consumers and also the revenue that it will generate in the short term. But companies and others will adjust in unpredictable ways, and it won't necessarily mean that they will come back to the U.S.
The president has talked about trade deals and economies opening up to the United States. In your view, was the Japanese economy closed to the United States? I mean, certainly from an automaker perspective, it's been a few years since I've been in Japan, but I didn't see any American cars on the roads of Japan. They were all Japanese cars there. But has the market been closed to the U.S.?
In general, tariff barriers in Japan are not significant. Japan has had open trade with the U.S. for a long time. But you're correct that on sensitive products like agriculture, there have always been high tariffs. That's not unique to Japan. So rice did become a significant issue in the negotiations. On autos, the main issue there is more complicated. So the concession that was given in the agreement related to auto safety standards, which have long been perceived to be a non-tariff barrier that have made made it more difficult for U.S. automakers to sell in Japan because they have to meet different safety standards. But there are a host of market factors that make U.S. cars less competitive in Japan that won't necessarily be addressed by these changes. So, there are areas, in short, where Japan's market has been rather closed. But on the whole, companies face relatively open conditions on a relatively free and fair playing field.
We've seen some reports about the EU seem to be maybe working, getting closer to a deal with the United States. We've got China next week. Just to wrap up, just remind everyone why having trade deals with these big trading partners is important for the U.S. economy and the U.S. overall.
Well, from the perspective of the Trump administration, the issue is that these countries are running trade surpluses, so they are seen as a negotiating tool in that sense. Overall, these are our major trading partners in the U.S., and so the trade volumes that are going through are significant to the economy. It's important that these relationships are maintained. It's important that, from the administration's perspective, they be rebalanced in various ways. So, getting these deals ahead of the August 1 deadline minimizes disruptions to markets and to companies' activities. So it's important that they move forward.
Yep, we can cross a big uncertainty off our list here, no doubt about it. Thank you so much, Kristi Govella, Senior Advisor and Japan Chair at CSIS, the Center for Strategic and International Studies, joining us from the nation's capital.
Let's stay in Washington, D.C., as the Trump administration called for boosting AI development in the U.S. by loosening regulations and expanding energy supply for data centers under new guidelines that also urged withholding funds from states that put burdensome rules on the emerging tech. Speaking of AI, the president will give the keynote at an event hosted by the All In podcast and a consortium of tech leaders, Carol, and lawmakers known as the Hill and Valley Forum.
Bloomberg Technology co-host Ed Ludlow is there. He has been there all day conducting interviews and reporting out what he's hearing. He joins us now at the Andrew W. Mellon Auditorium in D.C. Ed, good to be able to check in with you. I'm sure it's been a busy day. Set the scene. Who's there? What are you hearing?
Yeah, I think that the point of difference with this administration relative to the last is that it is a sort of deep mix of the private sector and government. So the Vice President, J.D. Vance, was on stage talking about how the point of the action plan is this 23-page document that's kind of segmented between action points and policy, is to allow America to move fast. But then you also have, of course, the CEOs, the critical CEOs in this space, which are those of NVIDIA and AMD also participating. Tim summed it up really well. It's an emphasis on deregulation and cutting red tape while acknowledging that the energy component of what's happening is the bit that's probably missing, but the deregulation is going to be there in order to allow America to move fast.
So you've got some pretty heavy hitters. You talked about Jensen Huang of NVIDIA. You've got Interior Secretary Doug Burgum. You've got Howard Lutnick, Commerce Secretary Lisa Su of AMD, Kelly Loeffler, former U.S. Senator, now head of SBA. You've also got the Secretary of State there as well. Does it seem to be, Ed, more of an event that is talking about opportunities, or an event that's actually announcing investments, announcing new elements to competing with China when it comes to AI? That's talking about establishing and ways to establish the U.S. as a leader with this tech.
Probably the former. I mean, the expectation is that the president is going to speak here later today, right? But accompanying that, concurrently, there will be some kind of executive order that puts into action the pledge to deregulate, allows companies to move faster. As it relates to particularly NVIDIA and AMD, you guys will remember our coverage of the president's trip to the Middle East and the Gulf. Mm-hmm. And the big surprise dollar value deals were NVIDIA and AMD directly selling GPUs into both Saudi Arabia and the United Arab Emirates. There is still a lot of questions within the document that was published this morning about codifying a successor to the diffusion rule. But the blanket statement here, be it from Vice President J.D. Vance, and I'm sure the president will discuss it later today, is that America does want to export its technology to the world. And that includes exporting to economic adversaries, including China.
Hey, one thing I want to ask you, though, how much of what we're getting from the president, though, seems to be about energy for data centers and helping with that process, Ed?
Yeah, a lot. You know, the way that the president framed it in his published remarks this morning is that this is a national security priority. And many of the particularly private sector attendees here have framed this in the context of you have to secure the energy supply if you're going to build the data centers and operate them. And this is something that JD Vance also discussed, but the data shows us that actually China is able to bring a lot more energy capacity and supply online much more quickly than America can. So I would say in summary and in aggregate, there's at least an acknowledgement, both from the government official side of those gathered here and the private sector, that America at this moment is behind China on securing that energy capacity, hence the focus on deregulation, cutting red tape, because they want to move faster.
Ed, how is this approach that you've seen just in the first 6 months of the Trump administration different than what you covered when it came to this during the Biden administration? I don't remember speaking to you from DC over the last 4 years.
Yeah, I think that's such an interesting observation. And actually, when I woke up this morning in DC, I thought to myself, goodness, it's super interesting that I'm here. Why wasn't I here more in the last 4 years? You know, the Biden administration, particularly through the CHIPS Act, is the lens you could look at through, legislated for government support from a policy perspective to onshore industry. You know, I referenced a minute ago the president's trip to the Gulf and Saudi. As somebody that covers the semiconductor companies, NVIDIA and AMD, that moment was a massive surprise that the president basically said, do you know what, you're fine. If you want to sell chips to Saudi Arabia and UAE, go ahead. And it wasn't just the big dollar value of those deals as standalone. It was the idea that this anxiety that a third-party country like Saudi or the UAE would have access to top-tier American technology, but without worry that China would have backdoor access to it. It just kind of went away overnight. So that's the difference here. You know, both that the private sector is more engaged with this administration. Those are the words of everyone attending here, right? It's been said on stage repetitively, but also the president just moves fast and evidenced by the deals that have been struck year to date in 2025.
It's such a fascinating world when one of the other big stories we've been focusing on today, we can't really get into it too much, but we have the story, I know the Times reported Chinese hackers are exploiting flaws in widely used software. Yeah. This is coming from Microsoft. So I'm a little confused, like, hey, open up everything to China at this point. We're comfortable with it? I mean, is everybody all in all of a sudden?
Yeah, so the way that it was positioned is, we're talking specifically about the H20 with NVIDIA, right? And there was a time in the last 2 years where the H20, even though they had engineered the performance out of it, it was basically the third best AI chip on the planet. That's just not the case anymore. And so the priority from those gathered here is, actually, we'd rather China build its AI industry on our technology than its own. But we are conscious that H20 isn't the cutting edge or leading edge chip that NVIDIA has. Those restrictions are still in place, but it is a part missing from the AI action plan. There's no codified successor to the diffusion rule. And as I speak to more people today, I'm going to certainly ask if they expect that piece of rulemaking is coming.
All right, 30 seconds before you go. AI is going to be on our mind when Tesla reports. Obviously, there's a lot when Tesla reports. What will you be watching out, though, in that report? And forgive me, I've only got about 25 seconds here.
Yeah, it's astonishing that it's happening at the same time that everything's happening here. All investors want to know is that Musk is focused on Robotaxi and AI future, and I'd be curious if he addresses his America Party plans, because that is the opposite of what investors are seeking. They just want to know he's paying attention to Tesla.
All right, that is our Ed Ludlow, not on the West Coast today, but in the nation's capital in Washington, D.C. Bloomberg Technology co-host Ed Ludlow. Catch him weekdays on Bloomberg TV at 11 a.m. Wall Street time. Hey, coming up, Tesla, reporting earnings. We just talked about that a little bit with Ed. Alphabet is too. More on both of those companies, what to watch out for after the close. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index trading at a record right now. S&P up 43, 63.53 where we stand now, up by about 0.7%. A 1% gain for the Dow, up 459 points. NASDAQ up 0.5%, up 104. The NASDAQ 100 index up 0.3%. And the Bloomberg Mag 7 index up by 0.5%. 1%. Tesla and Alphabet, both members of that index, they report after the close of trading today. Right now we have got Tesla just about flat on the day. Alphabet down 0.3%. Our Mandeep Singh will have a whole lot more on Alphabet coming up in just a moment. 10-year, 4.37%. The 2-year, 3.87%. Gold is down 1.1%, $33.94 the ounce. And West Texas Intermediate crude down 0.1%, $65.25 for a barrel of WTI. Earnings news. Hilton Worldwide Holdings shares, they're down 2.8%. It lowered expectations for net income for 2025 as demand for U.S. hotel bookings declined in the second quarter. And Southwest Airlines will be among the names reporting tomorrow. Investors will likely focus on the end of the carrier's bags fly free policy. An Idaho judge has sentenced Brian Kohlberger to life in prison without the possibility of parole for murdering 4 University of Idaho students. Again, recapping, stocks higher, S&P at a record up 44 right now, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Can't wait till passengers fly free.
Yeah, that's not how it works. I'm sorry to say.
I'm just saying, I don't care about the bags, but Carol Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. I listen to Charlie. He's got good stuff.
They should charge for carry-ons and make checking bags free.
Yes, because it's getting crazy.
Yeah.
I have never seen so many people stuff, sometimes me included, stuff in an overhead bin. I'm just going to say.
Definitely you included, as somebody who travels a lot with you.
I check too, though.
Yeah.
I check a lot of stuff.
You do.
All right, let's get to what's going to be our focus, certainly after the close today. 2 big tech earnings. You know who they are. We're talking about Tesla and Alphabet. What to watch out for. We want to start with Alphabet. Shares are a little change year to date. The stock has rallied more than 30%, though, since the low in early April. We've got Mandeep Singh here in studio. He's Bloomberg Intelligence Global Head of Technology Research. All right, most important thing, is it advertising, Google Cloud, both? What is it?
Yeah, but even within search and Google and YouTube, I feel they gave some more metrics in the last quarter. And to me, it's the growth rate on those metrics. So one of them is 270 million total subscribers across Google One and YouTube subscriptions. Now compare that to a Netflix, which has got 300 million subscribers. So a lot of people don't realize Google has a subscription business which is over $30 billion in ARR.
That's serious.
And they've got 270 million subscribers that I expect to grow at least 20%. So that is one thing to watch out for. The other is, in the world of AI, everything is about token consumption right now. And token is another way of saying, for every query, you're going to use a certain number of words to pass to a LLM query. So that translates into token consumption, and it's a very big number. Google, last time they talked about it, it was a 480 trillion, growing almost 5x month over month. So you want to see that token consumption carry forward because it's going to translate into faster cloud growth and search growth. And that's why it's so important.
We just explained that.
So think of it this way. When you type a query in any LLM, whether it's ChatGPT or Gemini, it has got, let's say, 15 or 20 words. Those 20 words translate into, let's say, 300 tokens. Those tokens get processed by the LLM. In turn, it returns, let's say, 400 or 500 tokens, and that converts into the chatbot response. So everything gets measured in tokens, because the world of LLMs and AI agents involve a lot of these back and forths. So now we're talking more consumption-driven metrics as opposed to a flat $20 subscription, which Google is selling. And that's why I talked about the subscription growth.
Right.
But this is like the derivative. Even with subscriptions, how much are you consuming on a agent basis or a user consumption based on the total number of or volume of queries that they're sending? And so it's very important to keep an eye on these two metrics, I feel.
Okay, Mandeep, pulling back the layers of how the AI is actually made. I want to home in on search here, though, because this is the bread and butter of traditional Alphabet. And I think I'm starting to see some chatter about concerns when it comes to search. And when it comes specifically to click-through, especially with the AI answers that Alphabet gives, that Google gives when you search for something, how concerned should investors be that people are just typing in a question, reading the answer, they're not clicking, and they're not clicking on any ads.
I mean, look, they always had monetized their search page in a way where for informational queries, the ad loads weren't high. But for commercial queries, you had pretty high ad loads where you would see, for a brand, you would see the ad right away. But if you are seeking information, like a lot of people do that on Perplexity or ChatGPT, you don't need to see an ad. So that's where, they have levers to change the ad loads so that they can still have search revenue growing, high single digit, which is what the consensus number is for growth. And some of it can be kind of offset by ad pricing.
So ChatGPT, Perplexity, Claude, they are not killing Google?
Oh, no. I mean, even in terms of query volume, you're talking about maybe 5 to 6% query volume for ChatGPT. People still use Google. In fact, I would argue AI overviews, the last number they shared was 1.5 billion monthly active users for AI overviews. A lot of the queries that you're going to ChatGPT for, now you can see it on AI overviews. So I would say it doesn't make a great experience to open another tab, go to ChatGPT or Perplexity and find similar information when I can get the same level of information. If the quality of the information was better.
Reading those AI overviews.
Just don't eat the rocks. When it tells you to eat the rocks, don't eat the rocks.
But how do you make sure, like we keep talking about, like making sure, like kind of checking the information, like look at the sources and so on and so forth.
Yeah, and look,
but how do we trust?
I think Google obviously has the credibility that they've built over 20 years. They've got the right sources, and that's where other LLMs will struggle. And I feel AI overviews is giving you a comparable experience to ChatGPT for a lot of queries. Not everything. In some instances, ChatGPT is better. But that's where the user experience matters, because they still are spending a lot more time on Google than they are on ChatGPT.
All right, so that means you have to tell Tim, stop making fun of Carol for looking at the Google AI reviews.
If Mandeep says it, maybe.
I'm just telling you. He says it. I'm in. Mandeep, thanks. I know we're going to be talking to you after the close, too, following the results. Really, really great setup. Mandeep Singh, Bloomberg Intelligence, Global Head of Technology Research. All right, let's talk Tesla, right? And the other big, which is the other big tech. After the close.
Yeah, those earnings coming out like Alphabet rallied those since April lows, up nearly 50% since then, and yet still down close to 17% so far this year. With what to watch out for, back with us from Bloomberg Intelligence headquarters in Princeton, New Jersey, Steve Mann. He's Bloomberg Intelligence Global Autos and Industrials Research Manager. So Steve, early this month, Tesla reported second quarter deliveries were 13% lower than a year prior. The company said little about possible future models that could help turn momentum around. What is going on with car sales at Tesla?
Yeah, they did have the Model Y changeover earlier this year, so that dented sales, not just the U.S., but globally, including the other big market that they have in China. I think, tonight's earnings call will be mainly focused on the outlook. They didn't really provide any guidance in the first quarter, but I think they're supposed to come back this round. So everybody's going to be focused on the consensus forecast. Right now, consensus forecast is for the full year of 1.65 million unit delivery. And if they can come back and say they will meet that, I think it'll be a little bit optimistic. And I think the market will be a little bit suspicious of that number. So they're going to have to really explain how I'm going to get to 1.65 if they do come in with that.
Do you think it can get there?
Well, I think the best case scenario is that they announce a cheaper vehicle. Remember, they've been talking about it for the last 6 to 12 months that they're going to launch a cheaper vehicle for the marketplace. It's becoming more critical that they do that because remember the 7,500 EV credit on new EVs is actually coming to an end at the end of September. So they really need a cheaper vehicle. Yeah. So actually, you good thing you bought the Tesla early.
Yeah, exactly.
But yeah. So I think the ideal situation, I think for investors to react positively on this stock is really if they come out and say, look, it's gonna the $7,500 going away is gonna hurt. But we have a new product, a cheaper product coming out to offset.
The reason I made the comment about the $7,500 tax credit is because of all the back and forth between the president and Elon on social, of course, over the last 6 weeks or so. The president says Elon's upset about the tax credit. Elon says he's upset about the deficit. I don't need to rehash everything. But anyway, before we let you go, the big picture existential crisis or potential existential crisis that I'm wondering about at Tesla doesn't have to do with Elon Musk's attention. It has to do with what China is doing when it comes to EVs. Not an issue here in the US because we don't get BYDs or Xiaomis here in the US. Right. Is it an issue around the world? Like, why would anyone buy a Tesla if they can buy what many say is a better car for cheaper?
Yeah, Tesla still carries a cachet, brand cachet, even in China. I think with all the politics that's going on in the U.S., he's well loved in China. And look, I think a lot of automakers, even Xiaomi, even BYD, still benchmarks off of Tesla. One thing that's interesting, though, in the fall, Tesla Model Y is coming out with a newer, a longer, extended version of that SUV. And that tends to resonate with buyers over there. I mean, they love the extra room in the back seat. We've seen in the past, for example, BMW, Mercedes, Volkswagen, and Volvo, they've introduced extended version of their vehicles, and the sales went up quite a bit because of that.
Hey, Steve Mann, just real quickly, 30 seconds or so. Do you think we'll ever see Chinese EVs sold in the United States or Chinese cars? And I just wonder, especially as we look to all of the trade negotiations that are expected to go on next week, just quickly.
I would be surprised if they do, because if Chinese EV comes in here, I think it's going to be a lot of hurt for the local automakers here.
All right. Interesting stuff. Steve Mann, thank you. So appreciate it. Bloomberg Intelligence Global Autos and Industrials Research Manager joining us at BI headquarters in New Jersey. Quick look at those stocks that are going to be reporting after the closing bell. Tesla now just up about 0.5% here in trading. What do we got for Alphabet?
Down about 0.6% in the trade today. It kind of goes against what we're seeing in the NASDAQ right now, up 0.5 percentage point. The S&P 500 up 0.7% on track for another record close. The Dow up 1% as we speak. Coming up next, as Carol mentioned, we got the CEO of one of the companies IPOing today. That's next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index holding close to a record. The Dow, the S&P, NASDAQ all gaining on optimism about trade and tariff deals. Right now, the S&P up 43, 63.53 where we stand. That is a gain of 0.7%. The Dow up 456 now, higher by 1%, while the NASDAQ Composite Index is up 106. NASDAQ up 0.5%. The NASDAQ 100 Index up 0.4%, and our Mag 7 Index ahead of earnings out of Alphabet and Tesla, gaining now by 0.5%. 10-year 4.37%, the 2-year 3.87%. Gold down 1.1%, 33.94 the ounce, and West Texas Intermediate crude up 0.2%, 65.44 a barrel. A research firm says the number of companies and organizations compromised by a security vulnerability in Microsoft's SharePoint servers is increasing rapidly, with the tally of victims soaring more than sixfold in a few days. Microsoft shares little change, down under 0.1%. Again, recapping here, the Dow, the S&P, NASDAQ all advancing. S&P right now at a record up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So we've seen initial public offerings definitely picking up some momentum this year. As a group, IPOs are up about 5% year to date as measured by the Renaissance IPO Index, but up 41% from a low back on April 8th. We've got a couple of IPOs today. Both are trading lower in their first day of trading. We've got NIQ Global Intelligence shares slumping after the company raised more than $1 billion in its IPO, giving it, Tim, just about a market cap of just under about $6 billion.
Another, a small cap, Carlsmed. It's a med tech company slipping in its first day of trading after it raised $100.5 million in its IPO. The company with an approximately $387 million market cap. Carlsmed uses AI to personalize spine surgery. It sold 6.7 million shares after offering them for $14 to $16 each. Here with more on the company in the first day of trading as a public company, Mike Cordonnier, co-founder and CEO and president of Carlsmed. From the NASDAQ, also joining us, Bloomberg News equities reporter Natalia. She's here in the studio with us. Mike, the stock is down on the first day. How are you feeling on a day such as today? Stock not necessarily moving in the direction you want to see?
Well, we're feeling really good about, how we're doing today. Continue to focus on our mission and building awareness about, really what we do that ultimately we know has transformed spine surgery. And so, continue to focus on the fundamentals and, it's ultimately going to be a really strong day for us.
For those who might not be familiar, Mike, just fill us in on exactly what you do. From what we understand, you guys do personalized surgery, which got one of our producers, Cece, a little worried because we thought all surgery was personalized. At least we hope that's the case when we go under the knife, so they say. So what exactly do you guys do?
Yeah, we've really taken a very different approach to what really a medical device company is. And so we are a medical technology company, and we work with surgeons and patients, and we take digital imaging of the patients as well as surgical inputs from the surgeon, create a virtual plan of that patient's surgery, and then we 3D print personalized devices for their spine surgery, build those on demand, delivered directly to the operating room. And ultimately what this does is this gives the surgeon really power to be able to perform very precisely what can be a really complex spinal surgery.
Mike, hi, congratulations on trading debut. I'm curious about your path to profitability because companies like yours typically require a lot of CapEx. Do you guys have any timeline in mind on when you become profitable?
Yeah, well, we haven't provided direct guidance to that. However, we have built our company very differently than a traditional medical technology company because we don't carry any inventory. Everything that we create is 3D printed directly on demand. And so as we think about this public offering, the use of capital to reinvest towards really our growth in being able to provide this technology to a lot more patients.
What's proprietary?
Yeah, ultimately, we have a broad technology platform that we built. And so as we think about rolling this out much more broadly, we've been able to create an end-to-end technology platform that is proprietary to us, that we've called our digital production system. And this is a all-in-one system that allows us to take digital data about the patient, about the surgeon, create personalized plans and the devices to achieve those plans. And ultimately, when we started down this journey just a few years ago, this whole end-to-end process took us a little bit longer than 8 weeks. And now we've really reinvested in our proprietary system that allows us to do this in 2 weeks or less, which really allows these scheduled surgeries to be able to be done in the time that the surgeon and patient needs them.
Mike, why was an IPO the right move here? If the broad adoption by doctors around the US and around the world is your goal here, why not look to be acquired by, let's say, a Medtronic or a Johnson & Johnson or a Stryker that already has these relationships with doctors and can roll this out more broadly?
Yeah, we really, think about this much more than a product line and really much more as a new way to run a business because, very different than what the large players in this space do, which tends to be a very capital intensive business model. We've built this new business model, which is really digital first, allows us in conjunction with the surgeon to do the procedure digitally first, and then make on demand everything that's needed. And so because of this, because of ultimately our ability to do this on demand, we've built a very nimble, agile company that we can deeply target those key institutions and the patient population to directly deliver exactly what's needed. And we see this really as a platform technology that has a lot more applications, much beyond our current indications that we have for spinal fusion.
So can I just ask you, so does that mean you ultimately see yourself maybe for every complicated surgery figuring out how to do this? Just quickly.
Yeah, absolutely. We see this as continued innovation, partnership with surgeons, as well as us on the technology side, to be able to provide a very novel, personalized solution to patients that ultimately drives better outcomes. Because as we've looked at our early data for spine fusion surgery, we've been able to materially improve outcomes for patients because we can directly personalize the devices needed for their surgery.
Mike, what is your tariff exposure?
Yeah, so we are 100% supply chain in the U.S., and so we're very well insulated from the news that's coming out around tariffs.
Hey, one thing I want to ask you though, in terms of the growth of the business, I know you're not going to give us anything on profitability or when you get there, but what's the growth that you are seeing in usage, growth in revenues? Can you give us some numbers? We are Bloomberg and you are public now, and ultimately you're going to be sharing this stuff. Just got about 40 seconds.
Yeah, absolutely. We've grown phenomenally since we started, and we can report that in the first quarter of this year, we grew 100% year over year, and so we see this adoption very rapid with new surgeons, new accounts coming on board, and we anticipate continued wide adoption of this new standard of care.
All right, I think we have to leave it there. Hey, listen, stay in touch. Love to know as you continue along, and maybe on that first earnings, you can come join us after that. Mike Cordonnier, he is co-founder, Cordonnier, co-founder, CEO, and president of Carlsmed, joining us from the NASDAQ on their first day of trading. And our own Natalia Kniazhevich, she's here in studio. She's our Bloomberg News equities reporter. She's going to stick around. We're going to talk to her about some stocks on the move. All right. That stock, though, seeing a little bit of a lower trade in its first day. This is Bloomberg.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, folks, we've got a rally underway on Wall Street. You've got the S&P 500 up almost 45 points. That's good for a gain of 0.7%, a 1% gain on the Dow Jones Industrial Average, and the NASDAQ 100 up at 81 points, or higher by 1/3%. This ahead of some big tech earnings. We've got Tesla and Alphabet after the closing bell, but we've got some definite upward momentum.
Yeah, those aren't the only ones, though. IBM is reporting ServiceNow, Chipotle, Las Vegas Sands, CVS, all after the bell, too. The focus, though, on Tesla and Alphabet.
But we could see, another record here on the S&P 500.
Oh, sorry, I was thinking about Chipotle.
Oh, sorry.
Burritos.
Well, it's because it's food and you're always hungry. I'm Carol Massar, along with Tim Stenovec. Let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter. We've got Natalia Kniazhevich. She is here in studio. And let's talk about IPOs, because we had a couple out today, and that includes one that's been going through some changes as of late.
Exactly. So this is NIQ Global Intelligence. The ticker is NIQ. The stock is down by 8%. This is the first day of trading. It was a really highly anticipated IPO because it's a private equity-backed company. It's a rare exit so far this year, and it was pretty well received among investors based on our reporting. And I don't know how to explain the stock price reaction. I'm not going to go into this, but overall, the IPO was priced at $21. The range was between 20 and 24, so it's a lower level of that range. The company's market value is about $6 billion. So NIQ Global Intelligence, the company that was founded in 1923, it has a very long history. At one point, it did television ratings, and people know about that here in the U.S.
We used to live and die by Nielsen ratings. Haven't for a long time.
Then it was separated, so now there are two completely separate businesses. NIQ provides customer intelligence, and it has a really solid portfolio of clients, including Amazon, Target, Walgreens, global brands like Sony, L'Oreal. Basically, it helps them understand consumer behavior a little bit better, and then, of course, target those consumers when it comes to marketing.
I wonder, our reporting says the top 25 largest investors in the deal were allocated 70% of the shares. And I'm just wondering, is that normal? Is that typical? And I'm just wondering if there was maybe that is why I don't know. I'm trying to understand why there's some downward momentum, because that's a pretty big drop.
Typically, when we have long-only investors interested in the deal, it's a very positive sign. It means that people will not be selling the stock after the lockup period expires. But now, I don't know, maybe it's like a more broadly some kind of market turbulence and maybe some kind of frothiness. And again, keep in mind what kinds of IPOs do well in this environment. It's crypto, first of all, right? Sometimes fintech, technology, AI-related stuff. But this company, the end user is consumer, but at the same time, it's a software company because it provides and also 80% of its revenue is recurring, which means that the company has a stable cash flow.
Yeah, some visibility, right?
All right, so that's consumer intelligence. Let's talk a little bit about energy technology. Baker Hughes on your radar.
Baker Hughes, the stock is one of the best performers today in the S&P 500 index. It's up by 11.2%. The company posted better than expected earnings results, mainly because it has a diversified portfolio. It's not just a typical oil player. We know that we have so much volatility in the oil space, but it also has exposure to gas. More specifically, they supply modules for LNG terminals, gas turbines, and with all this excitement about AI and data centers and demand for energy, this is where Baker Hughes is winning. Just to compare, for example, Halliburton, this is more like a pure oil services player, US-centric, and we see that the stock's performance is not doing as well as Baker Hughes. So it's a big win for the company.
What goes up might go down. What goes down might go up. I was trying to make a transition. It's a little lame. It's a little lame.
No, it's not a bad transition. The company that actually invented the escalator.
I know.
You're talking about Otis.
Otis, the ticker is OTIS. The stock is down by 11.5%. Here, this is why it's an interesting story. It's a global company and it has a global exposure. Mainly, it posted larger than expected drop in new equipment sales. And as a result, this elevator maker lowered full year guidance. New equipment sales declined by 10%. CEO said that mainly, this can be attributed to some challenges in China and in North America. We also saw some declines. Two analysts, specifically JP Morgan, they said they did not expect such a big decline in operational guidance. So this is where we see that it is a little bit like consumer-sensitive, tariff-sensitive business. And despite the fact that so many people are saying, yeah, maybe, tariffs is not as dramatic, this is what we can see in the stock price reaction.
Yeah. All right. So taking a little bit of a hit there. Good stuff. Now, Natalia, thank you so much. Bloomberg News Equities reporter Natalia Kniazhevich joining us here with some of the stocks on the move. For more conversations, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. We've got a rally underway.
We do.
A little bit. Yeah.
Ahead of earnings from Alphabet and Tesla, the S&P 500 up 0.7%, the NASDAQ Composite up 0.5 percentage point, the Dow up a full percentage point.
Yeah, and we're looking at about more than 320 names in the S&P 500 higher ahead of those big tech earnings. Hey, if you're watching on television, the close is coming your way in just a moment. Tim and I continuing on radio with Bloomberg Businessweek Daily. Join us. This is Bloomberg.